Investing in a stock just because it has fallen a lot may not help. By DK Aggarwal Globally, stock markets are going through a rough patch due to trade tensions from the US-China trade war, rising interest rates, tensions in the European Union over the Italian fiscal standoff and Brexit and other factors. There is a concern among investors that higher interest rates would bring on tighter financial conditions, and this may dampen growth going forward. Foreign investors have been withdrawing from most emerging markets ever since the U.S. economy started growing and bond yields turned more attractive in the U.S. amid a strengthening dollar. The Indian stock market, which was Asia's top performer till late August, was spooked by surging oil prices, a plunging rupee and growing financial concerns as credit crisis among non-bank lenders soured investor sentiment. Actually, the weakness in rupee, a surge in US dollar, bond yields and crude oil prices have created vulnerability in Indian macroeconomics. So far this calendar, the rupee has depreciated over 13% against the dollar. Apart from this, there are worries regarding the outcome of the forthcoming assembly elections in the key states of Chhattisgarh, Madhya Pradesh, Mizoram, Rajasthan and Telangana and the general elections in April to May 2019. As the warm-up for the 2019 general elections, the world's biggest democratic exercise, begins with just about 7 months left, the domestic market looks anxious. This, even as some of the bold economic reform initiatives of the Modi government are still underway. Undoubtedly, the forthcoming elections are going to be the curtain raiser. The outcome of state elections will set the trend for the general elections in 2019 as these states together have some 65 Lok Sabha seats. If the Modi government returns to power at the center in 2019, there will be positive sentiment, especially from retail investors and vice versa. There will be positive sentiments in the sense policies and the reforms initiated by this government, which are midway through or are nearing completion, would surely get completed, providing a positive impetus to different sectors of the economy. The Modi-led government has launched several reforms, including the GST, reforms at monetary policy panel structure, bank NPA cleanup, insolvency and bankruptcy code and direct benefit transfer scheme. Undoubtedly, continuation of these policies will be important to keep the pace of growth intact. Investing in a stock just because it has fallen a lot may not help. Instead, invest in stocks where the business economics is strong. Off late, higher crude oil prices and a drop in the local currency have had strong implications on companies in the form of a slowdown in sales growth, margin compression and lower profitability, resulting in price corrections owing to valuation adjustments. Disclaimer: the opinions expressed in this column are that of the writer. The facts and opinions expressed here do not reflect the views of www.economictimes.com. Commenting feature is disabled in your country, region.